So if you take out the Palantir earnings, that was a bright spot in a very red day. I think yesterday was very difficult for everybody. It's obvious. And yesterday shows you how much psychology plays a role in being a good investor. In fact, I would say that psychology and the ability to withstand days like yesterday and the day before and the day before is probably 80% of the business. That's all. Now, the good news for us is that crashes like the ones that happened yesterday lead to better returns and bigger profits because they create discounts. It's all about your ability to accept the fact that you will always have drawdowns in your portfolios. I mean, no portfolio in the world, not Warren Buffett, not Peter Lynch, not any investor you can think of, has ever avoided drawdowns. You will always have red days in your portfolio. It's inevitable. And some people just can't accept it, especially coming off of incredible 18 months where everything just went up straight every single day for a year and a half. It's very hard for people to deal with. The ability of you as a long-term investor to accept the fact that every once in a while you're going to see a lot of red in your portfolio is the key to investing. It's as simple as that. It's not even complicated. Now, the thing is, I've explained this before many times, but a wise man once said that the fastest way to become broke is to try to get rich quick, and that's kind of what happened yesterday. Everybody talks about yesterday, but nobody really understands what really happened. So let me simplify it for you. Yesterday, a lot of people who try to get rich quick got hammered. So I don't know if you heard about this, but yesterday the Bank of Japan decided to raise interest rates for the first time in a long time. Japan was pretty much sitting at 0% rates for a long, long time. Yesterday, the Bank of Japan basically raised rates, and it screwed a lot of people who were basically doing this get rich quick scheme, and they dragged the entire US markets with them. Basically, the idea is because Japan was up until yesterday a 0% rate, you could buy yen, you can borrow, and you can convert that yen into dollars, buy US equities, essentially borrowing at 0% interest money and then investing it in the stock market. The infinite money glitch, right? The only problem is that with that specific issue, you're exposed both to forex issues. Let's say that the yen dollar exchange rate basically goes crazy, and you're exposed to higher interest exposures. And that's essentially what happened yesterday. Once the rate in Japan went up, their interest rate skyrocketed, and the dollar basically and the yen got separated. So basically, they got trapped with their mouse strap kind of on their genitals, let's put it this way. And they had to liquidate a lot of the assets to pay for that, and they caused the entire market to go down. That kind of exercise couldn't have happened at the worst time for the market that was already kind of in a pain mode. So yesterday you saw this massive sell-off because of all these get you money quick, get rich quick guys that were doing this carry trade in Japan. Basically, were liquidating, and they dragged the entire market with them. So lesson number one is that get rich quick schemes do not exist. The yen carry trade thing worked until it didn't, and then people got hammered, and then the entire market basically got slammed. The good news is that the whole carry trade thing is over. It's basically non-existent, non-factor, so you can basically forget about it. The one thing I want you guys to remember, and I mentioned this multiple times, yesterday I was very active in our community, on our Discord, on our Patreon, almost throughout the day, nonstop, even though I had a flight to catch a domestic flight over here in Thailand, my vacation, and I had to go check in at the hotel and deal with a lot of crap. But I was on all day saying the same thing to all my students. You only lose if you sell. If you don't sell, nothing happened. And a day like yesterday is the perfect example that you shouldn't do things that force you to liquidate. Yesterday, a lot of people who didn't want to sell had to. If you had margin and if you invested based on margin yesterday, you probably had to sell, and it forced you into a lose situation. Also, if you had money in there, which you actually needed, you had to sell. So my lesson here to all my students, and that hasn't changed probably in 4 years, is that you should never invest money that you may need in the next 10 years. That's money you should be basically forgetting for 10 years, maybe more. And number two, you should never use margin. If you're going to use margin, if you're going to use money that you need for your everyday stuff, you might get caught in a day like yesterday liquidating stocks. You don't want it. The idea here is very simple. All these stocks we saw plummet. I have partial list right here. Palantir before earnings was down 13%. Google was down the same. Microsoft was down the same. Tesla was down 17%. All these companies have improving earnings. So these companies had massive improved earnings from a year ago, and they were selling at a massive discount. That's actually good. That's not bad. I mean, when you have a stock that's basically doing better, but the price is going down, that's good for you. That's not bad. And a lot of people kind of misunderstand this. Think about the idea of the person that owns a farm and the farmer next door, who's a drunk psychopath, starts screaming at them in the morning, "Hey, I want to buy your farm at half price." Do you get, do you sell it because he wants to buy it at half price? Or they say, well, that's just a crazy dude. Let him just scream out loud. That's the whole thing here. It's as simple as that. As long as you do proper due diligence on the stocks you're investing in, as long as you're doing proper due diligence and you pick companies that are going to do well from a business perspective for the next 5 to 10 years, and as long as you remain long term and you DCA and you DCA into weakness, that's a cheat code. It's impossible to beat. The best friend of a good business in the stock market is just time. As simple as that. And yesterday, Tom Lee was actually on CNBC, and he was asked about this. And basically, was asking, "Well, Tom, when is this thing going to end?" And he basically said, "Look, it's probably going to end this week, maybe Tuesday, maybe Wednesday. This isn't a prolonged red wave. It's a temporary kind of a reaction." And his rationale is very simple. He basically said, "Look, as long as we're getting rate cuts, and at this point we have the Fed priced in at about 0.5% decrease in September at 90%, according to the Fed CME Watch tool. As long as we have Fed cuts, low inflation, high GDP, the whole bull run that he was talking about, nothing's changed. Nothing has changed except some craziness. We have some geopolitical tension. We have some carry trade issues that happened yesterday and went away, but the Fed is still going to cut rates. Inflation is still low, and GDP is still high. And we didn't really have a war breakout yet, so there's nothing really to talk about that. Now, a lot of people talk about the SAM rule. Oh, the SAM rule got triggered, and it has 100% accuracy, and it's going to basically mean we're headed for a recession 100%. Well, that's just not true. Claudia Sim herself was on TV multiple times over the past 2 days saying, "Hey, guys, this time, this rule is probably not going to be accurate because there's a lot of new issues, a lot of new variables in this." And this year right now we have, such as massive immigration, that skew the data. So this isn't the year to look at this. She herself was basically saying, "Hey, this isn't a recessionary unemployment cycle." Now, talking about Tom Lee here, I wish I had better setup to show you the clip, but it's on CNBC. I'm going to link it below so you guys can go and watch it. It's about 5 minutes. At the end of the day, let's talk about what we have in front of us. 90% of a point 0.5 cut in September, basically meaning 100%. 3% CPI, which is good. 3% GDP growth, which is good. We have a good momentum on the market. The S&P 500 is still up 13% year to date. The IWM is still lagging the entire market, so nothing has changed. And that's why 0% of my community sold yesterday. We're playing the long game. We're not playing this whole panic selling mode. People who panic sold yesterday got hammered. And the prime example is Palantir. Palantir started the day minus 13. If you panic sold that and you missed the entire earnings spike, you basically missed out on 30%. Simple as that. You have to play the long game. Otherwise, you're the patsy. So let's look at it this way. Job market is stable. The SAM rule, you have the originator of the rule saying, "Hey, that rule doesn't scare me in 2024. War in the Middle East, we don't have yet. All we have is chatter. Rate cuts, we now have guaranteed. GDP growth is high." So at this point, another day that panic sellers got destroyed. Yeah, but another day for you to basically add to your positions, create dollar cost average activities that decrease your cost basis. At the end of the day, right, what you have here is an opportunity to get the same companies you wanted to buy yesterday at a 15% discount. Companies that are doing better and better every single year. It's a very, very simple game. It's not complicated. As long as you manage your risk, of course, correctly. And I've mentioned this before. Before I went on vacation, I told you, hey, the market is looking shaky. You might want to take a third off the top. But, besides that, just keep it steady. Keep it steady. Do your thing. And make sure that at the end of the day, you just do dollar cost average over long periods of time. You don't concern yourself with short-term market swings, market momentums. This whole thing is absolutely insane. The markets can go crazy in the short term. It doesn't mean that you have to respond and react every time that happens. You can stay the course, dollar cost average. The one thing you need to have in this market to make a lot of money is number one, psychology. You need to be able to withstand days like yesterday. And you can do that by joining our community. The reason that 0% of my community sold yesterday is because we have 15,000 members on our Discord that were basically sitting in the chat room together, telling each other, hey, this isn't the right time to sell. Let's not make stupid decisions. It's kind of a support group of very smart people who basically hold each other hand when they need to. And I have no problem saying that. So if you want to join, it's free. Discord.gg/TomNash. The link is below. Join the community. So you're going to solve the psychology part. The other part is the due diligence part. As long as you choose good companies that are going to do well in the next few years, all you got to do is just keep buying every month. And if the stock dips, increase the pace of your buying. But don't FOMO and don't panic sell. And just keep doing that for 10, 15 years. You're going to be set for life. Simple as that. It's not complicated, folks. It's not complicated. Now, I've mentioned this in the video that I did about Palantir. And by the way, shout out to Palantir. Smashed earnings, triple beat EPS, beat revenue, beat guidance. Everything was phenomenal. But Palantir is still a volatile stock. It can still go like crazy. It can go down by 20% a day. It can go up 20% a day. Nobody knows short term where this company is going. I think it's going to massively outperform the market of the next 15 years, but it's going to have a lot of volatility. So in red days, that's your opportunities. Don't forget, days like yesterday was an opportunity, but it's not your last opportunity. You have more coming up. Don't worry about it. So Palantir aside, all you got to do proper research, remain calm, develop discipline, develop psychological toughness, join the community. We will have new spots for the academy as of September 1st. Currently, the academy is locked until September 1st, but September 1st, we're going to have some spots left. Some new spots open up for you guys to join. And I'll see you in the next one. Just keep calm. Everything is fine. Don't worry about it. Shout out.